Good morning. After a 5-day rout, investors may feel adventurous this morning as Indian markets could see much needed relief rally. World markets, especially in US, have ignored political turmoil in Egypt with Dow breaching 12,000. Other global markets have also been stable to positive amid growing optimism about the ongoing recovery in US and elsewhere. Unfortunately, the Indian markets haven't benefited from the global rally in recent times. On the contrary, India has lost quite a bit of ground, with the key indices dropping below 200 DMA. Inflation has been the biggest bugbear for India along with the policy paralysis. FIs have latched onto some of these negatives to pull out $1 billion in January. All eyes will be on the forthcoming union budget. There have been mere murmurs of a few bold steps being considered for the budget. If that happens, we might see some semblance of recovery. But more importantly, inflation has to soften and government must act on crucial reforms. FII flows will continue to be critically variable for the Indian markets. Monthly auto sales, trade data and manufacturing PMI shows that the Indian economy remains to be in pink of health. Also, manufacturing PMI data around the world has been encouraging. Watch out for the US monthly job data that is to be out on Friday. The Nifty could well crack further. Another fall of approximately 5.7% will certainly make the Indian markets attractive from medium-term and long-term perspective. For the Nifty, 5,350 is likely to act as good support base, while resistance is expected to kick in at 5,550 to 6,000. For the Nifty, cluster of previous top support are at 5,347. It also corresponds to 61.8% Fibonacci levels. FIIs were net sellers of Rs 10.36 billion in the cash segment on Tuesday according to the provisional NSE data. The domestic institutional investors were net buyers at Rs 6.3 billion. The foreign funds were net sellers of Rs 9 billion in the cash segment on Monday according to the SEBI website. ONGC Videsh Limited has decided to relinquish its oil block in Egypt as it did not find the discovery commercially viable. Indian Oil Corporation plans to invest Rs 50 billion to expand its Koyali refinery in Gujarat from 13.7 million metric ton per annum to 18 million metric ton per annum. SBI will raise 100 billion rupees through bonds to augment its capital base to meet these growing business requirements. HDFC has entered the booming Indian education sector by picking up a stake in Indus World School, which is promoted by the education company Career Launcher. A 36% jump in export led to a sharp decline in India's trade deficit in December 2010 to $2.6 billion from $11.6 billion a year ago. The centre has approved subsidy payment of Rs 80 billion to public sector oil marketing companies for the losses incurred by them on the sale of LPG, kerosene, diesel during the third quarter. Moving on to our recommendations, the technical calls for the day are: we advise buying Bharti Airtel in the range of Rs 312 to 314 with a stop loss of Rs 306 and for the target price of Rs 331. We recommend traders to sell Biocon February futures below Rs 339 with a stop loss of Rs 347 and for the target price of Rs 327. Our derivative strategy for the day are: short Hindustan Unilever February futures in the range of Rs 271 to 272 for the target price of Rs 262 and with a stop loss placed at Rs 276. Long HDFC February futures in the range of Rs 634 to Rs 636 for the target price of Rs 658 and with a stop loss placed at Rs 624. Thank you. Wish you have a great day ahead.